Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutamente in the right place. Without further ado, let's get ready to knock out our standard disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, good. All right, so let's do it this way. Let's get over to screen one, and here's how we're going to approach. I know that the title was Detailed Midband Trades. But I think before we can have that discussion, we have to talk about something that is obviously a little bit more important than that, which is something we call the market state. So when you hear the term state of the market, what does that mean? Market condition, there's different sort of terminology around that topic, but they all kind of mean the same thing. So when we say we got to know the state of the current market, what are we talking about? What does that mean when we say that we've got to know the market state or the market condition? Here's a Russell chart, 4-range chart with all our indicators on it. For those of you that are visiting, we trade futures exclusively, intraday volatility, no overnight positions. We're connected to the data feed from our broker, Ninja. And the 4-range bars, you can see that right here. We have our indicators on this chart, which are background colors, bar colors, power meters, of course, which is the trend, predictors, real-time support and resistance. Put those on the chart, take them off as you see fit. Yeah, it's the market direction. Trending or sideways, ranging or trending. Dennis, Toby, everybody, right. So let's look at some different market conditions on different charts and see if we can all sort of get, on the same page, if you will. And this is going to help you immensely in your live trading for the rest of this week, tomorrow, Friday, and into next week and beyond. Now, from about here to all the way over here, what would you say the market condition is in this area right here? Circling it with my cursor. So let me, before we get started, okay, so we all know that there are 3 possible conditions for a market to be in. It's either going to go up, it is going down, or it is going sideways. Up, down, or sideways. It's going up. Good. Hey, tell you what, I'm going to mix it up a little bit. I'm going to mix things up a little bit. You know, we are talking about midband trades. So there's one setting up on crude oil. Let's go ahead and pull that chart over right now. Why don't we? Why, I think we will. And let's talk about what we can do here. Is everybody ready? Here is crude oil right now. Now, collectively as a team, let's try to make some decisions. Now, is this a midband box setting up? Yes or no? Midband trade. What do you think? What is a midband trade? This is probably as good as illustrations you're going to get, right? What is a midband trade? Well, some of you might not know, so let's talk about it, okay? So a midband trade is defined as a condition where the market is in one of these areas right here. So it can be located in the band just underneath the midband. it can be located in the band just above the midband, and it can be located bars directly on the midband itself. Now, in this condition, are we going to go long only, L, short only, S, or B for both? Let's say hypothetically we are going to draw a region box using Object Trader, and let's suppose that the box would look something like this. Now, cast your vote for L, long only out of the box. That means that you expect it to go up. Short only, which means when it closed below the bottom of this box, you would get a short. And B, you would turn on Object Trader on this box both sides of the market. So either direction it went, it would take a trade. Cast your vote now. L for long, S for short, only B for both directions. Now, as you're pondering that question, let's ask a secondary question related to the current crude oil market condition as it sits right now in real time. Is the trend up, down, or sideways on crude? Interesting mix of answers. You want to see some more data? Okay. How about that? Now, if I was going to put some lines on this chart to signify support and resistance, I think I'd put one kind of up in this area right here. I put another one down in this area right here. And I would say that the midband is right in the middle. So in the current market condition, the market's sideways. In fact, it's been sideways since about 9 o'clock this morning. Now, granted, you had a little bip up here through the top by a few handful of ticks, and you had a couple little bips down, through the bottom, kind of right in there and right in here. But for the most part, for the past, what is that? It's 9 hours, 8 or 9 hours since early 9 o'clock this morning, you've been pretty much in this range right here. Does that make sense? So what you want to do, this is how you identify, and most of you, of course, already know this, that you are in a sideways market, where sideways being defined as relatively equal highs and lows. So, what you want to do is find a sweet spot, at the top of the range and kind of put a line up there, right? And then you want to find some kind of medium spot of support and put a line down here. This helps you visualize. Gary does this all the time in the room, right? This is how you visualize the range. As long as, and we have a saying, and most of you probably know it, of course, is that as long as it remains within the confines of the lines, you are said to be range bound. And the lines are as follows, right here. Now, depending on the size of the range, the prevailing theory is, when trading ranges, that depending on whether you're coming off of an uptrend or a downtrend, in this case, there is no trend, so that's not really relevant. But generally speaking, if it's sideways to up, say you were coming off of an uptrend here, there's a big massive uptrend, and now you're going sideways. Well, then everybody knows that the primary mode of entry would be to buy support, take profits at the top of the range, right? Conversely, if you were coming off a big sell-off, the market was just tanking, and you begin to consolidate, and we're going to look for conditions like that where we can talk about how to deal with that, right? Because that happens all the time. Then your primary mode of entry would be to short the top of the range. Now, another important factor when looking at range-bound trading is the size of the range itself. In this case, you're looking at support around 43, 45-ish. And you've got resistance up here at 63, 80-ish. So you're in about a 35, 40 tick range. So is that tradable based on our criteria? Our minimum criteria. Most of you know what that is. Some of you might not know. It's okay. You know, this is, the webinars are all about learning, okay? If you come in here and you don't know the answers to a lot of these questions, don't worry about it. Over time, you will. You will learn, you know, how this works, right? 20 to 25 ticks is the minimum, yes. And this is 35 to 40. So yes, the answer is it is acceptable to trade this, right? Okay. Now, what you have to do to determine whether it is prudent to take a long or a short is measure the distance between where you get in the trade from the top of the box to where you would take profits. There has to be sufficient meat on the bone to take a mid-band trade in a range. Okay, that's what we're saying. This is something pretty... Let me get a sip of tea. Hold on. Stand by, please. Sorry about that. Yeah, so we know when you say the term meat on the bone, we're saying, okay, if I get filled up here at 64, 65-ish, close the side of the box, and I get to 80, that's 15 ticks. I can at least get a scalp off up here and potentially catch a runner if it breaks and takes off. Yes? Likewise, if you get filled, say, under 55, and you get all the way down to 43-ish, that's at least 12 ticks. That's acceptable. Now, let's do another one, and we'll look at a few of these. We'll scan different instruments and look for these conditions. But if, on the other hand, the range looked more like this, here, let's do it like this. Let's do it like this. Let's do it like this. Let's say the range hypothetically looked more like this. So technically speaking, it's right at the threshold for barely tradable because you're right at 20 ticks, yes? Right about 20 ticks or so, right? Like that. There's the 20. So from a technical point of view, you could say, yes, well, that's 20 ticks. You should trade the range. However, should you be taking mid-band trades with a range that looks like this? Yes or no? No. As you can see in that condition, there is literally no meat on the bone. By the time you get filled with a little bit of slippage, what have you, if it was to hit here and slam back in your face, you probably wouldn't make any money. Likewise down here, by the time you get filled, a little bit of slippage and you know, commission, whatever, you know, there's no meat on the bone here. You got to have at least 10 or more ticks. 10, 12, 15 ticks is acceptable. So this is a tradable range of 40 ticks to take a mid-band trade, okay? Now, just a word about trade management in a condition like this. It could be possible, and we'll circle back and look for this. Oopie-doodle. Oopie-doodle. Oops. Oh, hold on. What the heck? What the heck is happening? Oh, there we are. Okay. All right, so this isn't happening, so let's just take those away. That was just a hypothetical. Word about head fakes in conditions like this. And then we're going to move on. It's possible to see a candle close up like this and get you long, or likewise, you could have a candle which closed down and got you short, and then the market dawdles around for, you know, a couple of 3 bars or whatever in here and sort of dinking around at the top of where you got in, and then it starts to reverse. What do you do in those situations? I'm not sure that's happened to a lot of you, right? You get into the trade, you think you're going to pop up to the top, it sort of dawdle dinks around, maybe it pops up here close to 73, you know, it doesn't really get all the way up here to 82, or on the short side, comes down, sort of dinking around, you're just up a few ticks, and then it starts to look like it's going to bounce before it gets here. What's the most prudent thing to do in a condition like that? Should you let it run all the way in the other direction and get your full stop out at 10, 12 ticks? Just like a deer in the headlights. Oh, it's running against me. What am I going to do? Oh, stuck. You get into a hope trade, you know. Goes up a couple of bars and then zoom, it's come back in the box. What am I going to do? Yeah, you close it. Hit the close button. Market close, get out. Yeah. You don't want to let a little head fake turn into a disaster where you get a full on hit on one or two lot. Then you're digging out of a hole. You don't want to do that. If the market doesn't immediately start moving in your favor and it sort of bips up and then reverses and starts moving dramatically against you, you hit that close button and minimize the losses. Get out very quickly and reassess the condition. The other thing that's important here too is obviously time of day. You have to just scream, help, help, help. Well, while you're screaming help, you maybe hit that close button while you're screaming help. Obviously, this would not be a good time to trade crude oil because it's extremely slow, and so the opportunity to get head faked is extremely high, right? You could get a lot of slippage in here. There's a lot of, let's see what yeah, look, here's the spread. The spread's 9 ticks. Yeah, you definitely don't want to be doing. Oh no, that's 1 tick. Okay, I saw a minute ago it was like 8 tick spread. Yeah, you want to look at the spread. The spread is, you're going to pay the difference between the bid and the ask to get in. Yes, that's called the spread. And slippage is where the market order, let's say the market order fires at 65, you might not get filled till 66 or even higher. So that's just adding to slippage. And then of course you put the commission on top of that. So now when the crude pit opens in the morning at 6 a.m. Pacific, good time to take trades? Yes, of course. 7 a.m. news, market open the equities at 6:30? Yeah. Inventory, oil inventory? Perfect. Because the market's moving. Spreads are tight. You get a chance to get a good move. This time of day, not so much. All right, how many of you, show of hands, want to look at more potential trade setups on crude for the past couple of days? Any crude traders in here? How many of you trade crude and want to see more setups? Show of hands, just say yes or type in a Y or whatever. Oh, quite a few of you. Okay, good. Quite a few. All right, well, let's continue on with oil. And I'm going to do an exercise to make sure everybody's paying attention. We do this exercise all the time, and a lot of people like it a lot. We try to recreate trades. I think this is today. This is earlier today, yes, on oil. And you get a chance to call when they happen. So I'm going to advance the chart, simulating that we are looking at it together in real time, reconstructing the morning. Yes? And I'm going to help you out. It's going to be a short trade. So I'm going to advance the chart, and when you think you see a short trade setup, you type in either T for trade or S for short. Ready? Here we go. All right, I'm advancing the chart. Okay, this was reconstructing the actual bars from 8 a.m. Pacific this morning. And let me blow them up a little bit so you can see more what they look like. There you go. Okay, here we go. We're advancing the chart. Remember, when you think you see a trade setup, you type in the letter T for trade or S for short. Okay, now we're at 8:07. 8:08. 8:10. 8:11. Okay, let me blow this up a little bigger for you. Get the bars. Bars are kind of small. There we go. There's some big juicy bars there. Okay, now we're at 8:15 a.m. Pacific time. But continuing on. Okay, now we're coming up on 8:16. All right, I'm going to stop it right there. Now, we had two conditions here. there were a couple of you, and I think, and I can understand if you're completely new to this, why you did that. Is I saw some T's and S's come in. I saw a couple come in when the market was right here, and I saw a couple come in when the market was down here. So this is something very important we have to talk about, and it's so important we talk about it every webinar. Every webinar we talk about this because it's just so extremely important. Okay. When you're in a downtrend, so let's back up for a second and go through it like this. Here we were range bound, and the range looked more or less like this. All right. Here you can clearly see a thrust down through support. It's called a little ABC pattern. It happens all the time, especially when you get trend changes. Comes up, can't even get to the mid band, and then just tanks. So, and it turns the background red. The mid band and all the bands start to stair step down, and we very clearly go into a very pronounced downtrend. That's why I said we're only looking for shorts, right? So in the case of the downtrend, the thrust direction is always down, right? In an uptrend, the thrust is always up. So for instance, when you looked at these bars here, you were in the middle of the downtrend thrust down. And so the rule of thumb for all of our trading is that we are retracement traders. So one thing, if you're going to trade this system, you have to burn that into your trading mind. We only trade pullbacks and retracements in trends. Okay? We never, ever buy or sell, oh, for Pete's sake, the thrust part of the move. Okay? Never. We never do that. That's a total flies in the face of everything that we do. So in the case of this down move, the thrust part is down. Okay? I know, if you're looking at this for the first time, it might be confusing, or you're trying to understand how market volatility works. It's totally okay. Here was the final push of the thrust in the down direction right here. So if you're getting in on thrusts, you're probably getting stopped out a lot, because and the psychology behind it is that let's talk through it as when we looked at it in real time. Okay, you see support was broken. Okay, right here you see it comes up and kisses. You're starting to think, hey, this thing might break, and I just want to start looking for shorts. Yes, and then it takes the support. Here's the kiss. Kiss and roll, kiss and roll, kiss and roll. Weakness is showing up, yes. And it starts to break, and it starts to break. And now, okay, now we're getting a red background. Bars are red. This thing is really ripping. This thing's tanking. I better get in. I'm going to miss it. It's called FOMO, fear of missing out, right? You've heard that term a million times, right? Fear of missing out. Fear of missing out causes you to want to jump in here because you think it's going to tank another 100 ticks and you're going to miss it. The fact of the matter is, there is a high likelihood. Now, occasionally it happens. I've seen markets in the buy program or sell program comes in, and that thing just rips. It could go 80, 100 ticks. You miss it, you didn't get in, and it never retraces. Okay, but it's very rare. Very, very rare that you wouldn't even get a small retracement. Now, you might also be saying, well, let's get more clear about what a retracement is. How come these retracements, look, it retraced here, Charles, right? Here it came down. Here's a little sort of baby thrust, and here's a pullback, and here's another little thrust and a pullback. Okay, we're going to address that in a second. Why isn't that trade entries? Well, let's continue on. And then psychologically what happens is it gets all the way down here, and now you're super convinced this is time to pull the trigger. I don't care, the heck with the torpedoes. Get me short now. Sure enough, as soon as you hit that button, you ever get that feeling like the market knows what you're doing and it's all rigged against you? Anybody ever get that feeling? Every time I get in, that stupid market pulls right against me and I'm upside down. It's like they have some kind of crystal ball and they're looking at my trading chart and I'm always upside down. Why does that always happen? Market knows what I'm doing. It's rigged. Right? No. No, the market is trading in a very orderly manner. What's happening is that you're getting in at the tail end of thrusting moves. And so when the market retraces to give you the chance where you should be getting in, you're stopping out, and then the market rolls over and goes in your favor. So now here we come up, and you can see there is a small collection of these bars here. Now let's blow this up. This is where I would like to talk about minimum retracements and positioning of trade entry. And you can think of it in 4 spots. No, I'm sorry, 3 spots. 3 spots. In a downtrend, the minimum retracement, it has to close above the stealth line, which is the sneaky snake little red line right here, and the line 2, which is this thin red line right here, up into band 3. So for instance, in a live room, you might hear Gary or myself say something like, well, that met the minimum retracement criteria for trade entry. And so what we're saying in the case of a short is that what that means is, yes, you closed above those 2, check mark 1, above the line 2, check mark 2, and you're closing inside of here. This is the minimum retracement. Now, thinking about the minimum retracement entry, why do we have that? Why aren't these retracements here and here? Why aren't these trade entries? Here you wick stealth, but you didn't close above line 2, right? See the thin red line? You kissed it. Why are these not entries? Any ideas? Let's look at when they happen. There it is right there. Now, as it turns out, they actually worked out, okay? But what is the distance between, by the time you get filled hypothetically on the close of this bar right here, or one of these bars, or even this bar down here, and where the support level is? Well, remember we talked about meat on the bone? Is there a lot of meat on the bone right here? At the time you looked at this, here, let's do another one. Let's do the next one. Let's do the next one. How about this kiss right here? Let's suppose you were super aggressive. You would have been filled either on this one, or this one, or a market order, hypothetically somewhere in between. I'm having trouble marking the bottom of these bars, but you get the idea, right? You see what I'm saying here, right? How much meat is on the bone before it gets down to an established swing between here? Thing's not lining up for me. And here. There's no meat on the bone. What we're saying is that there is a high likelihood that it could kiss the support level and bounce right up in your face and take you out. Now let's contrast that. Oops. What the heck is this crazy little arrow thing here? Let's contrast that with this retracement here, where you come up into here. Now, what's the distance between here and here? Between getting out of this box and getting down to here? Like 10, 12, 13 ticks. Well, you know, it's a comment coming from Kathy, only if you have the guts to pull the trigger. That's true. What's the best way to learn how to take these trades? Any ideas? These minimum retracement trades? How do you learn to do these? Load up for bear, put 5 contracts on a live account, leverage yourself up with real money, practice. No, of course not. You do it all in sim. Now, what is the other thing that affects the depth of retracement for how this volatility and this price action works? What are the other factors involved here? I'll give you a hint. It starts with an I. In fact, I'm going to open up this text box, and I need to type something in here. It starts with an I. What else affects how deep those things go? What is it I want to type in there? Starts with an I here. Let me put the I here and help you out a little bit. This is one of those critical things for all these. If you're going to trade futures, this should be like on the top of your head. Like retracement trading is all we do. We never buy and sell the thrust. That would be like 1A. And then sort of right next to it, not even at level 2, say 1B, would be this one right here. N, okay, anybody getting it? S, T, what's the letters I'm going to put in here now? You're going to fill in the blanks. This is like Vanna White with that, I'll buy a vow. What goes next? In fact, I'm not even going to say key. I'm going to say critical to your success. These 3 things, if you learn anything tonight, if you retained anything, let's say you can't remember anything I said the entire night, and you go off and you have dinner and you go to sleep and you wake up tomorrow morning and you say, what the heck did he talk about last night? I have no idea. You know, I better watch the recording, try to figure out what the heck he was talking about. These 3 things are you've got to memorize. You only take retracement trades in a trend. You never buy and sell the thrust move. And you've got to figure out the instrument that works best for your type of style of trading. You could do the first 2, and you could pick an instrument where, let's say you pick NASDAQ, and that thing retraces 30 ticks in your face. Doesn't respect the mid-band, doesn't respect swing levels, flies right through everything. It gets a spike down. Next thing you know, it's first it's down here. Next thing you know, it's way up here, and does the trend change? I don't know. We're looking at it as, we call it spazzy. We don't even keep it in a room anymore. We don't even keep it in the room anymore. I mean, it's just, I mean, if you decide, you don't want to just throw yourself in front of a bus. I mean, that thing is just out of control. All right, so just to define, because we're going to look at a ton of other trades, so we're all on the same page. A mid-band trade, again, is this from this band to this band and on the band itself. And there is an occasion where you can get a deep retracement in a trend that can go up to here. Now, in an uptrend, we looked at the other situation. The reverse is true. This is considered the minimum retracement in a pullback on an uptrend, right? This is still a mid-band trade. That doesn't change. And then a deep retracement on the long side could conceivably come down into here and still be an uptrend for a trade. Now that we have shown all 3 conditions to take trades, in the case of the short, deep retracement. In the case of the short and long, mid-band retracement. And in the case of the short, minimum criteria retracement here. Given the condition with your chosen instrument, should you take all 3 types of trades, yes or no? 5 seconds. 5 seconds. Type in a Y, boop. Type in an N, boop. Should you take all 3? No matter what happens on any instrument that you're looking at, you know that when it goes in these bands, you know what they're called. You know you're supposed to put the box. You got the object trader all figured out. Should you take all 3, yes or no? 4 seconds for you to respond. 3 seconds. Just a Y. Yes, I should take all of them. No. N. 2 seconds. Time's up. No. Well, what are you talking about, Charles? What am I doing here? What am I doing here? Why are you showing me all this stuff if you say I don't have to take all 3? I should take all 3, yes? Well, remember we talked about know your numbers? We talked about know your numbers? Does anybody remember that? Where you go back in, and it's a refresher, you go back in and use your count performance tab. You study how you did on your various instruments. Each day at the end, you do a generate report. You print out your trades. You look at what you did. You go over here and you use Chart Trader. And you right click and you go to data series. And you go down here to say show plot text and marker. Armed with that information, it will show you on the chart where trades were taken. and you have to go to the selected account that you traded to. So let's say in the case of crude oil, you created a sub-sim account called CL. It's all the way up here like this. See CL? And then you right click here, CL Sim Trades, Properties, show, oh, not that one. Nope, it's the wrong one, sorry. Data series. Okay, so everybody was gonna go text and marker, apply, close. Now nothing's gonna show because I didn't do any sim trades on CL on the thing. But what will happen is you'll see your trades will show up. It'll show where you got in, it'll show you where you get out, and you can see how much you made or lost on every single trade. And let's suppose that you, throughout the course of the trading session, you had, let's just make something up here for the sake of the discussion. You had 2 deep retracement trades that you stopped out on. You had 3 mid-band trades. Every one of them made money. 2 made good money and 1 made a little bit of money. And you had 1 minimum retracement trade, and that was a loser. Now what do you do? What is that telling you? Why would you even do that? In fact, you're asking that, Bob. Why would we even take the time to do that? That's really tough. I don't want to do all that work. I don't have time for all that. Well, I don't know. You know, if I was to run a report and I went back in and I looked at the chosen instrument that I traded for that day, and deep retracements I got killed on. I never made any money on those. The market moved to get me. I took a little shallow one and it creamed me. I took a full hit. But you know what? I took a couple of 3 of these mid-band trades, and I'll be darned, every single one of them worked out. So what is that telling you of the 3 that you should take? What should you stick with and what should you not do? The mid-band. I mean, it doesn't get any simpler than that, right? Hey, pop quiz. I'm going to throw something at you, and you get 5 seconds to answer. I'm going to throw a gold trade at you. It's setting up in real time, and everybody's got to answer this, okay? Pinky swear you're going to answer this, right? Here we go. I'm going to pop it up real quick. You have 5 seconds. Ready? Here comes the chart. I'm going to start the counter. Now, the question is this a short trade right here, yes or no? 5 seconds. Just type in a Y, yes. Don't even think about it. Look at it. 4 seconds. No. Is this a gold trade short right now, right here? 1234.50. Should you short gold right now? Yes or no? 3 seconds. 2 seconds. Wire it in. 1 second. Make your call. Short it right here. Market order. Here, where's get my live account? Where's my live account? Let's load it up. Let's put 4 lots short right here. Come on, let's do it. Everybody log in and take it, right? Remember, you're trading at your own sole discretion. Okay, time's up. No! No, 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 no. A million times no. Every single person in here typed in a no. Good. Total gold star. A++. You nailed it. This is the thrusting part of the move. Does everybody see it, right? Here's the thrusting part of the move. Right here. Good. Everybody said no. Go log into Gary's account and try to trade Gary's money live and take a short on gold right here. Okay, good. Good deal. Now, second part of the question on this same gold chart. If and when gold retraces, where might you look to get short? Type in a number. Here's the numbers over here. This is the different levels on gold. So, for instance, here's 34, 35, 36, 36.50, 37, 36, 37.60. Okay, I'll give you 10 seconds on that. If gold retraces from the thrust, then I'll help you out. It's a short trade, right? Background is red, bars are red, mid-band and all band stair stepping down. We're looking for shorts. We're retracement traders, right? That's the number one thing we remembered. We're not thrust traders. Gots to be a pullback. Type in a number. If the gold pulls back to where, I know it's after hours, we're not going to take it, right? But if it did, and say it was in the active trading session, so I'm moving around real good, and there's good volume, and the slippage is not real good, well, where would you get short? 6 seconds left. Look at the chart. This is the looking beyond the right edge part, where you're looking out projecting out into the future, and what you're saying to yourself is, if it does this, I'm going to do this. Time's almost up. Type in where you would look to get short. 2 seconds. I'll give you a little bit of extra time on these because you got to sort of look around a little bit and try to decide where you're going to get it. Okay, time's up. Most of you typed in 3640. Quite a few typed in mid-band. There's a lot of 3550s. Good. Excuse me. You could put a line up here. This would be the first thing you would do. Most of you use lines, and we hear that all the time from you. Lines really help, and they really make a huge difference. You can see that the last time when it rolled over, it more or less kissed right up in here, as well as here. Secondary part of the question of the pop quiz. 5 seconds on the clock. Was this a legitimate short trade entry, yes or no? Type in a yes or a no. 4 seconds. Don't even think about it. You should just react. Boop. Just look and you should instantly know. Beep. 3 seconds. Is that box legit short? Yes or no? 2 seconds. Cast your vote. You got to know what's legit to answer it, right? You got to know what's legit and what isn't. Okay, time's up. Yes. The background is red. You're looking for shorts. Here is the thrust right here, which turned the background red. And you retraced up above, closing above line 2 and stealth. Check mark 1, check mark 2, little box right there, you're filled short. The answer was yes. Okay? Most of you typed in up here, you typed in numbers and I would say total yes on that. If she came up here and kissed and rolled, this would be your shorting opportunity. This is the kinds of things you hear in the live room, right? You know, gold will be sitting down here somewhere. And either Gary or I might say, you know what, if gold came up and kissed anywhere around that mid-band up there at 3640-ish, I would look to get short up there on gold. So that's what we're doing. The actual market itself is sitting right here, right? Here's real time. That's where it is right now. But we're talking about up here. That's because we're projecting beyond here. And we're anticipating, anticipate to participate. Who used to say that? It was an old saying we had. So your anticipation is, if it does come up into here and rolls over, I'm going to short that. Now, the fact of the matter is, some of you typed in a lower entry, and this was true. Minimum criteria would now be here. Close above stealth, above line 2, up into band number 3, minimum criteria. And quite possibly it could go a little higher. You might see it go as high as up into here possibly, and that would still be a legitimate short. Well, for the most part, we do bar closes, Bob. That's a good question. You could put a limit order here. I generally don't do that because I've seen cases where, you know, you think it's going to go to here, and then some, news event comes along, or some tariff reaction to what, tariffs or whatever. What would happen is, let me make sure I'm in sim here. Hold on, give me a second. I'm going to just hypothetically do something here real quick. Make sure I'm absolutely in sim. Nothing would happen, but I just don't want my live account exposed to anything in the after-hour market like this. Let me show you why generally we don't do that. Okay, let's say I want to get in at 3640, but I want to fade that a little bit, so I'm going to put a sell order like right here. You know, and the thinking here is, well, you know, I don't know if it's going to get all the way up here. But if it kisses and rolls up here, I'm going to take the short. Well, I mean, I've seen cases where all of a sudden gold, something comes out, the thing just takes off. Sorry, I thought I had that turned off. Stand by. Sorry about that. I turned the ringer off, so that won't happen again. Yeah, no, you can see the obvious risk here is that, the market doesn't pause here and roll as you expected. It plows right through here. By the time you're filled, you're way up in here with a bad short that you need to get out of, and you got to dump it and you take a hit. Yeah, especially on a fast mover like Russell and YM and NASDAQ and what have you. ES, you could do that with ES because it's quite a bit slower. But I just don't do that because what I actually want to see is I want to see bars come up in here and what they do. So the explicit answer is we're not going to use limit orders at the entry point. I want to see what the bars do up here. Okay, I want to see they're going to come in here. They're going to let us draw a box. You could put a market order when it rolls over, engulf it with a little OT box if you want. You can use a retracement line, the Ray tool. And then I want to see follow through to the downside. I want to see closure, bar closure, and follow through to the downside. That's what we want to see. This now, in this type of pattern, convinces us that we took the appropriate action. Yes? As opposed to a situation where it blasts up through it and we're stuck in a limit order. Does everybody see that? The reasoning behind why we do that? Okay, good. Tell you what, let's go ahead and look for one more, a couple more on gold while we have it open here. You want some harder ones? You want a harder one? You want me to lob an easy one up for you, or you want some hard stuff? Break out the hard stuff. Okay, tell you what. I'm not going to tell you. Break out the hard stuff? Okay. Now, I'm not going to tell you what direction the trade is. So when you type in a trade entry, T is no longer an option. Okay, it's no longer an option for you. You're going to have to call the trade as it sets up in real time, looking at the bars as I advance it. And then you have to type in, if you think it's a long trade, you type in an L. And if it's a short trade, you type in an S. Everybody ready? Here we go. This was today, early in the morning on gold. Pre-market, here's the chart right here. 4:53 a.m. Pacific. This is you early birds. Are you ready? Remember, you type in the trade type when you think you see the setup that you would take and is appropriate. Here we go. Okay, I'm advancing the chart like we're watching it together. We all got our coffee. There's 5 a.m. Pacific. 5:03. 5:05. 5:09. 5:10 a.m. Pacific time. 5:15. Make the bars a little bit bigger for you here. There we go. 5:19. Okay, I'm going to continue to advance the chart. 5:21. Okay, 5:25. It's 5:30. Okay, we're watching the bars together. We're all watching it together, right? Okay, there's 5:38. Blow it up a little bit here. Still watching gold together early in the morning. Remember, when you see a trade set up, you type in, if there is a trade, you make the call, right? You're going to make the call. You could be looking at gold tomorrow morning and it looks like this. What are you doing? It's buy, hold, or sell. Hold means you do nothing, right? Buy, hold, or sell. That's long or short. If it's hold, you do nothing. Continuing on. 5:40 a.m. Pacific. 5:45. 5:48. So we've been watching this market for a little less than an hour, about 45 minutes, 48 minutes. 54 coming up on 6 a.m. Been watching gold for about an hour now. All right, I'm going to stop it there. Now, interestingly enough, let me tell you what the responses look like that came in, and I have to say kudos to everybody because almost everybody did really good on this. Let me address the first question. The first issue is buying long, holding, doing nothing, or shorts. The good news is none of you typed in shorts, so that's good. I think you could clearly see that the thrust move was, when you came out of this box, was up. Background turns green, bars are predominantly blue, the midband and all the bands are stair-stepping up. We are in an uptrend, right? So we are retracement traders, so by definition we need a pullback into a support level to get long. So this was long trades you were calling, yes? Now, there was a couple of you, and I won't name names, who typed in an L when the market was up in this area right here. Now, looking back on it, I'm going to give you a chance. Was this the right place to get in? Some of you typed in an L when it was right. As these bars were forming up in here, a couple of you typed in L's. Now, looking back on it, was that the right thing to do? No. Obviously, you see no. That was the thrust part. We don't do that, right? It's got to pull back. Good. Now, a handful of you typed in L's when these bars formed right in here. And that is correct. That was the first long entry. Are these bars closing below stealth and line 6 into the minimum acceptable criteria area to get long? Are these bars meeting that criteria to get long, yes or no? Of course, some of you may not have visualized that as it was coming at you in real time, but this is the skill set you need to develop to take good trades. You need to be able to see. In your head, you could be like a little computer robot. I'm not really going to look at any of this until it gets at least down into here. Yes? Right? And then almost all of you typed in, so then let's follow through. Okay, so then here was your thrust out of the box. Good, legitimate long trade. You could have trailed your stop up here and, it would have been stopped up out here somewhere on your second or third or more contracts, depending on how many you put on. And then almost all of you typed in long and L's when these bars formed right here. And that's correct. This is a midband trade. You came into the band above the midband. Some of the bars closed on the midband. And depending on how you drew the box, you were filled long on the close of this bar outside the box right here. Now, if you drew the box earlier, it's conceivable that you could have been long on this bar right here. Depending on how you drew the box, at what time you drew it, and how you positioned the box. So when one of these bars are up in here, you got long. Okay, that trade worked out too. This is a midband trade, so kudos on that. Now, if you said, well, hey, wait a minute, Charles. What about here? Is this a minimum criteria trade? And that's a question for you, team. This will be the last question, then we're closing out. Is that meet the minimum criteria, yes or no? These 1, 2, 3, 4 bars, yes or no? Well, that's not the question, Toby. I see what you're saying. Is it a trade or not is separate from what happened. So there's two things going on there, right? Two things going on. Does it meet the criteria is the question. And then what happened is the second part, right? The answer is yes. You close below stealth, the green line, check mark 1. Close below 6, the thin green line, check mark 2. You're in band 6, minimum criteria. And most of you typed in, well, but you never got filled. And that is true. It never closed up, and you never got in. So you have to rebox it down here at the midband, which did get filled. Very good. Very, very good. All right, I'm going to stop the recording. Most of you did quite excellent. I hope you